This is the WealthAbility Show with Tom Wheelwright. Way more money, way less taxes.
Welcome to the WealthAbility Show, where we're always discovering how to make way more money and pay way less taxes. Hi, this is Tom Wheelwright, founder and CEO of WealthAbility and your host. And very excited about today's program. So we're going to discuss the American Rescue Plan, right? This $1.9 trillion biggest giveaway, biggest handout in history, let's face it. And it's hard to complain about what we call free money, but we have a special guest who's going to really help us understand what does that free money really cost, and what does that mean for the future when we just bring out $1.9 trillion like that. So we have David Stockman, one of my favorite guests. David, you have an amazing background. If you could just remind everybody a little bit about your background.
Oh, sure. And I'm very happy to be with you. I guess I've had kind of a checkered past. Half of my career was in Washington as a staffer congressman for Michigan, and I was thinking spending should be curtailed. That wasn't too popular. I then went to Wall Street for the next 15 years, and I sort of spent time in the sausage factory seeing how it was really made, and that gave me some perspective too. So I was a partner at Salomon Brothers. I was one of the founding partners at Blackstone, and now I produce a daily analysis or newsletter, if you want to call it that, going after all of the folly, all of the insanity, all of the, over-the-top nonsense that is coming out of both ends of the Wall Street in Washington, the Federal Reserve, and the fiscal side of the government, both Capitol Hill and the White House. But I think today might be labeled a day of infamy, to borrow that phrase from FDR way back in 1941, because at the crack of 9 a.m. this morning, on the count of the IRS, thousands of banks around the country distributed $1,400 stimmy checks to 100 million people. That's 140 billion that went out in 1 nanosecond. Swish. It was out there, 140 billion to people who hadn't, proved that they needed the money, that they lost their job, or that they'd suffered any income loss at all during this, so-called pandemic and lockdown that we've had. Now, that's, and I'll continue, but let me just add, that 140, that's just a down payment. The Biden so-called $410 billion of stimmy payments. We're not talking about all the rest of it. And that comes on top of $470 billion that went out in the first two rounds. So at the end of today, really, this is 365 days, 1 year, that's it. $870 billion of stimmy payments have gone out, no questions asked, to 80% of the American public, whether they needed it or not, lost income or not, and that's
so
where
let me
we are
ask you
today,
this question.
and that's just the beginning.
Well, let me ask you this question, David.
Sure.
I love the marketing crew of the legislature, because they're always coming up with these great names for their bills. This is the American Rescue Plan. Here's my question. First question: did we need rescuing?
Yeah, the point is absolutely not. Let me, at this stage of the game, it's in dollars, take the inflation out of it, up 4.5% from February 2020, the peak before COVID even hit, or the lockdowns happened, or the economy hit the skids in April and May. Now, that 4.5% gain in real retail sales is the biggest jump since February 2011. In other words, it's the biggest increase in 10 years. It's double the average growth over that decade of real retail sales, which is about 2.5%. Now, I thought we had some kind of calamity. I thought the economy was knocked on its rear end, which it was. But thanks to all of this, free stuff, these massive bailouts, and this is the fifth, the Biden plan is the fifth. we have a spending level for the households of America that's virtually higher than it's ever been before. Now, how did this, miracle happen? Well, it happened by simply borrowing like there's no tomorrow, and Treasury borrowed. And, somehow we think that this is sustainable, that this is sensible, that this is rational economics. It's not. It's just basically borrowing and printing our way to catastrophe.
So what when you say that, and of course we hear this all the time, but the MMT people would say, no, it's we can print currency, it's okay. This isn't going to be catastrophe, even though they estimated that this is basically going to cost $3,000 per person in every household. So a family of four, this is a $12,000 loan, right? That the federal government is taking out, that is basically secured by their taxes. Okay, so why are the Democrats wrong about this? Why can't you do this?
Well, it's not just the Democrats. The Republicans are complicit. Everybody. We're talking about five, COVID relief plans. $6 trillion now was borrowed, and that means that forever going forward, we're going to be paying $200 billion a year in interest, even at the low interest explosion of giveaways that happened in the last year. And as I said, and you asked, it was total overkill. I've done a lot of analysis on this. It's in my daily newsletter, David Stockman's Contra Corner. And if you calculate the loss of GDP, sort of to get a measure, how much did we lose? How big is the hole in the economy, so to speak, from the COVID, and how much have we thrown at it? Well, the loss of GDP, as best I can calculate, is $800 billion. Now, that's the amount of shortfall for the last year, for all for 2019, before any of this hit. Now, we're spending $6 trillion against an $800 billion hole in the economy, as broadly defined or measured as you can make it. I mean, is that overkill? Is that insanity? You're going to borrow that much money to fill a hole of 800? Then much of it is focused on, well, households got laid off. Some of them lost their jobs permanently. All true. Some households lost income. So we looked at wage and salary incomes over the last year, and again, compared the actual to what was being earned in February 2020, again, before the COVID, before the lockdowns. We were at so-called, peak of the cycle, and Trump said at that time, the greatest economy ever. You remember that? Well, compared to that $805 billion of wage and salaries a month, we have lost over this entire period only $310 billion. So they passed out $900 billion practically stimmy checks. And then employment benefits, the $600 topper and the $300 a week topper and additional coverage. So just between those two, they've thrown $1.5 billion of stimmy checks and unemployment benefits at a wage loss that net for the whole economy was $300 billion. If that isn't overkill, that's 5 to 1 there. I don't know what is, but let's ask why this is happening. Politicians have always been wanting to give out free stuff, but in the past they were constrained by the fact that if the Treasury tried to borrow too much money, interest rates would go up. People back at home in the district on Main Street, I knew this when I was a congressman, home buyers would be so high, and the Treasury has sharp elbows. So they pulled back when they got to the edge of the deep end. But now we have the Federal Reserve monetizing, that is, printing the dollars for any amount practically that what politicians want to borrow. And so therefore, the restraint on the politicians is gone. So the heart of the problem, the culprit in all of this, is the Federal Reserve. They're making it possible for politicians to be as absolutely irresponsible as they.
So what's the consequence? So going forward, what's the consequence of this?
Well, the MMT people said there's no consequence at all. Okay, but even if you believe that nonsense, which it almost isn't worthy of a refutation, it's so stupid and ridiculous. But even if you believed all that, the fact is you're going to have $6 trillion of more debt permanently on the public debt. It'll be up to $30 trillion shortly. And if you just say that, interest rates are going to average over a long period of time, 3%, well, that's 180 billion a year of interest that'll be paid by taxpayers, born and unborn, for the indefinite future, and that won't be available for all the other things that people want government to do. So that's the minimum. But the real issue is federal government is borrowing this kind of money. It was 3.3 trillion last year. Now with the Biden stimulus, it's going to be over 3 trillion again this year. These numbers are just out of sight relative to the size of the economy. When you print enough money to cover deficits of that magnitude, you're kind of on the slippery slope of undermining the entire financial system.
Got it. So, well, thank you, David Stockman. Again, David Stockman's ContraCorner.com, and we'll be right back in just a minute. Welcome back to the WealthAbility Show, where we're always discovering how to make way more money and pay way less taxes. I'm here with one of my favorite guests, David Stockman, and we're talking about the American Rescue Plan. And one of the questions I have for you, David, is I'm a tax guy. So my theory on this is that one of the reasons for this and why it was so important, I mean, you think about, we've got a new president, and in his first 100 days, his single major act of legislation is a $2 trillion handout. And the question is, why?
Right.
Okay, if it's not really needed, which none of the economists see it as needed, then why is this? And, there's always this, well, it's to, get money to the states, the California and New York and Texas and so forth. And that's fine. But what do you think of this idea? My theory is that this gives, one of the things that Joe Biden has campaigned on was higher taxes for people making over $400,000. And all this new tax that he wants to raise, but it's pretty hard to raise taxes during a crisis. So my question is one of the reasons for this $2 trillion stimulus an excuse to raise taxes next year or later this year?
Well, I think that's a very good point. I'm not sure they thought it all the way through, but obviously people like Janet Yellen are already whispering that somewhere down the road here, we got to, tackle this deficit problem, but we got to do it in a way that's, equitable and all that baloney. And so, yeah, that it's creating a complete setup for higher taxes on business, on corporations, on the producers and the producers in our society. So I think that's part of it. I think part of it also goes back to the last year. They were just out of control. They passed 4 different bailouts last year with the original Families First Act and then CARES, and then they needed more money for the PPP program, which is a total colossal invitation to fraud like you've never seen before, and money thrown in every direction. Some businesses needed, some didn't. And then we had one right before Christmas, and right as that thing was pending, remember, Trump had the, lack of, foresight to say, well, I'd like 2,000. Well, the Democrats, grabbed onto that as quick as it came over his Twitter account. And they said, we hear your 2,000 and we'll do it. And so they did 600 before Christmas, and now they're around it. That's the only reason. And politicians, I was there as a congressman in the 70s. I was budget director right in the middle of all these battles in the 80s. Politicians in the past never would have thought about this kind of silly reason. The Republicans say 2,000, we'll do it, and we'll do it quick, unless it has become so easy to spend money and borrow money and have Fed finance it all. We called it in the old days monetize. That's what they're doing, plucking credit out of thin air and buying bonds like there's no tomorrow. They're buying 120 billion a month. And again, Powell's on there today saying, well, we're going to keep doing this for quite a while just to make sure the economy is working. So that's I think the real reason. Then finally, they're saying, look, they're all out there. They said, I've been reading this morning, a House Democrat saying, last time in 2009, when we did the big bailout with Obama, we didn't go out and brag and advertise to the people how much we've done for them. So now they're all out there saying the check's in the mail, open your computer, you'll see it in your account. And they're basically trying to lay the groundwork for a big, gain in 2022 where they can, get a Senate majority and a bigger House majority than the razor-thin one they have right now. I certainly hope this won't happen. Don't think it'll happen, but that's really what they're up to. They're spending the trillions of dollars of future taxpayer money in order to try to lock themselves into office in 2022.
Okay, so here's, I think, the personal conflict a lot of people feel. First of all, it's really easy to accept free money and vote higher taxes on somebody else. That's really easy to do.
Yeah.
And second of all, it's very tough to turn down free money, and you go, well, everybody else is getting it, so I should do it. Is there anything individuals can, should, ought to be doing to help, deal with this that, has the potential of being a pretty serious problem, it sounds like?
Well, I think that's simple. Here's what I'm writing about today that I posted on my site. 108 million tax filers have incomes of 75,000 or under, which means they'll all be eligible for the new $1,400 stimmy check, plus a stimmy check for their kids if they have any, and you can just sort of do the math. Now, when I did the math, you take that stimmy on top of, the 2,000 that's already gone out, or the 1,800 that's already gone out. Remember, we had 1,200, then 600, now we got 1,400. You put that all together, it's 3,200. When you add all that up, it amounts to about $700 billion going to households with incomes under 75,000. That's 108 million taxpayers. That's 71% of all taxpayers. And guess how much they paid in income tax in the most recent year relative to that 708 billion of stimmy checks they will have received in the last year? The answer is 155 billion. In other words, in the last year, these politicians have sent out 4.5 times more stimmy checks to this massive base of the tax-paying public than they're actually paying in taxes. Now, how the hell are you going to run a system on that basis? Because the 30% of taxpayers who are left are already paying almost all the income. The bottom 70% that I've been talking about here, 101, they come for less than 20% of taxes. So if you just think this through, you realize we're heading into a fiscal calamity in which everybody's getting free money to pay taxes. The 108 million taxpayers that I've mentioned here that have filed with the AGI, adjusted gross income, under 75,000, have paid an average of $1,000 of taxes a year, and they're getting $12,000.
The argument, of course, is that there's income inequality, and this is a way to offset that income inequality. And I mean, to me, that's clearly their argument. And it's pretty hard for somebody who makes, say, $1 million a year to complain about giving away some money to those people who make under $75,000. So how do you deal with that income inequality issue? Because we clearly do have severe income inequality.
Well, if they wanted to deal with income equality, which I don't think they should, then they should have said, we're going to raise taxes right now, $708 billion for people above 75,000 K, so we could give it to as stimmy checks to the people below. They didn't say that. They're scared to death to say anything close to that. So they said, we'll just borrow it, charge it to the account of future taxpayers, and we'll tell the Fed to print the money in the interim to make it all possible. So that's the problem with it, number one. Number two, the income equality and wealth inequality that people are talking about is made not by capitalism, not out in the free market. It is, made by the Federal Reserve through this crazy policy that we've had for years and years and decades now, inflating massively the price of financial assets, when the fact is 88% of all stock is owned by the top 1% and the top 10% of taxpayers. So the reason that income equality has gotten dramatically worse in the last 30 years, since Greenspan started all this in '87, is that the Fed is massively inflated Wall Street, even as its policies have been totally harmful on Main Street. So there's your answer. If you want to deal with income inequality and wealth inequality, which I don't think you do because of free market capitalism operating honestly, but we haven't had it for 30 years. So if you want to reverse this, correct it, go back to where we were at '87, then get the Fed out of this massive money pumping operation that isn't doing any good for the Main Street economy and is creating a problem that is now allowing the Democrats to say they're going to tax the upper brackets out of existence in order to make ends meet. We're heading for a real fiscal collision, I guess you might say, and a hell of a political battle. Because even though they say we're only going to tax the rich, people know that you might tax the rich today, but you're next in line when you let these politicians spend money the way they have. I mean, it's insane. We were spending about $4 trillion a year until this came along in 2018, in years before. Now we're spending at the federal level $7 trillion and more a year, and with no more tax revenue than we had before. So you can see the dimensions of this insanity that's underway.
So, final question: Are we going to get significant inflation out of this?
Well, I think more and more the likelihood is possible. Again, the inflation in the first instance never gets out of Wall Street. They've now been pumping 120 billion a month into the bond dealers. Okay, supposedly this is going to trickle down and help housing starts or business investment or households, to borrow more than they already own 17 trillion, but what the heck, have them borrow some more. But that's not happening. It is basically causing the stock market and all the speculators, which are, they're all over everything now, not just the normal stocks, but you can see these crazy outbreaks we've had with Bitcoin, which I think is a great idea, but who knows why it should be $60,000. With the NFTs, with all of these Reddit stock runs that have happened, GameStop and all the rest of it. This is, or even something like Tesla, which is trading at 1,400 times its meager net income, and even that net income comes from regulatory credits, not from making cars. So when you put all that together, they created a hellacious bubble, and that's where the inflation is. And when that bubble collapses, I think Main Street is going to reel. In the interim, yes, commodity prices are going up. Manufactured goods prices are going up because they're putting all this spending money in the pockets of people who aren't producing any more goods. So I think we're going to have the worst of both worlds. Eventually, a stock market that collapses, and in the interim, rising inflation, which is just going to eat away at paychecks that are already, not going anywhere in real terms.
Awesome. Well, thank you, David Stockman. This has been fascinating. For our listeners, just remember, you can, this is recorded. You're gonna see this on YouTube. You can get this on wherever podcasts are. But David Stockman, David Stockman's ContraCorner.com, David Stockman's ContraCorner.com. And David, you are a wealth of information. Love your energy. And any final words?
Well, I would say, buckle up. We're heading into unknown territory, uncharted waters. with this economy and the financial market and the borrowing and the political stalemate and partisanship in Washington. None of this adds up to an optimistic future. So, the best thing to do is get out of the bond market, the stock market, and wait for, a better opportunity.
Awesome. Thank you, David Stockman. Thank you, everybody, for listening. David Stockman, this is on the WealthAbility Show, where we're always learning how to make way more money and pay way less taxes. We'll see you next time.
You've been listening to the WealthAbility Show with Tom Wheelwright. Way more money, way less taxes. To learn more, go to wealthability.com.